Moody's downgrade is the first for Italy in nearly 20 years. It cut the country's long-term sovereign debt rating by 3 notches to A2, matching the aggressive cut made by S&P last month. Moody says Prime Minister Berlusconi's government will struggle with growth and debt even after passing a €54 billion austerity plan. Now, there's a broader context to this downgrade. Moody's warns that, quote, all but the biggest euro area sovereigns face sustained negative pressure on their ratings. Our economics editor David Tweed joins us now. There's hardly goes a day without another blow.
It looks like that, doesn't it? I mean, we're looking at the bond market in Italy. We do see that bonds are down slightly, but as you mentioned, it's what they had to say in the statement about what might happen elsewhere, which is quite important, because Moody's said that there's a possibility that you could get policymakers in Europe to actually react to this in a positive way, but there's also the concern that the precise opposite to that will occur, and you'll have policy error, which is going to keep putting pressure on any country, really, that needs to find funding, particularly the non-AAA rated countries in Europe. Well, there are only 6 AAA rated countries in Europe, so everyone else under pressure, which is why you're seeing the drop.
And Berlusconi under yet more pressure.
Already got 4 lawsuits against him. He's got, what, a decade of very slow economic growth. In fact, I was in Luxembourg yesterday because there's a tension going on between Giulio Tremonti and Mr. Berlusconi. And in Luxembourg, Tremonti came out and he was asked about the performance of the Spanish bond market compared with the Italian bond market, because yields, the spread in Spain is actually lower than it is in Italy right now, and he said perhaps it's because of the prospect of elections. So everyone immediately asked him, does that mean that you think there should be elections in Italy? Oh no, he said. But there was an underlying hint. It seemed like there was something going on there.
There's been an underlying tension between those two for quite some time, hasn't there? Now, the focus goes back to Greece again today, not because of the bailout or anything like that, yet more strikes, and these are biggies.
These could be very big strikes. What's going to be very key about these strikes is to actually see the turnout, because that's going to be the best way to actually judge what the social tension is going on in Greece at the moment, given the fact that you've got all of this extra austerity being applied at the moment, 30,000 public sector workers having to take pay cuts, more cuts going on, increased taxes on property. It's looking pretty difficult there.
David Tweed for now, thanks.